All right. I think we've hit we're over 100 participants at this point, so we'll get it going so we can stay on time. Hi, everybody. Thanks so much for joining us. This is a panel on oh, this is a panel on how VCs think about climate tech, or sorry, how VCs think about talent. We've got three amazing climate tech VCs in the building today. This is all part of Climate Career Week. So if you haven't already, please check out climatecareerweek.org. We've got a bunch of other sessions over the course of the next few days, as well as recordings of the sessions from the last few days, and there are local meetups still happening around the world over the next few days. So I'm really excited to welcome Matt Cinnamond from USV, Christina Hendrickson from Lower Carbon Capital, and Brett Rubin from Galvanize Climate Solutions. All three of them work on the talent side of the portfolio talent function at their respective VCs. And all three VCs do significant climate investing in the case of both Lower Carbon and Galvanize, exclusively climate investing. And so we're here today to help demystify some of the role that VCs play in the climate tech ecosystem, and to give you some hopefully useful tips in your climate career transition. And finally, I'm Jonathan from Climate Draft, co-founder of Climate Draft, and Climate Draft is also now part of the Lower Carbon family. So we work across the climate tech community. We work with over a dozen VCs and hundreds of companies in their portfolio. And that's now all brought to you by Lower Carbon. And please check out climatedraft.org if you haven't already. We've got over 6,000 jobs, I think, on our job board, and you can create a profile in our talent directory that's discoverable to these companies in our network. Also, last bit of housekeeping, we've got a Q&A function at the bottom of your screen. So please use the chat for introducing yourselves, connecting, what have you. But if you have any questions you'd like the panelists to answer towards the end, please put them in the Q&A. You should also be able to upvote other people's questions, and we'll be using that once we're done with the panel discussion. With that, I'm going to go in alphabetical order by first name, and I'm going to hand it over to Brett to introduce yourself and your firm.
Hi, everyone. Thanks for joining. My name is Brett Rubin. I lead our portfolio talent support here at Galvanize Climate Solutions. We are a multi-asset climate investor. We have multiple asset classes. We have venture and growth equity strategy, a global equity strategy, a sustainable real estate, and a sustainable real estate vehicle, as well as several others that will be coming online in the future. I specifically partner with the founders and mostly C-suite leaders at our portfolio companies that we invest in, thinking through and advising on various senior level talent strategies, and also different organizational people, things and needs that arise. And I spend a lot of time, cultivating an active talent pipeline of seasoned executives to potentially join our portfolio companies full-time or more on an advisory basis, and in some cases, even as potential independent board members. I've been with Galvanize for about a year and a half, when we only had one investment vehicle and about 30 people. So it's been really fun to see our growth over that time. We are now a mix between being virtual and then have offices in San Fran, New York, and London. Prior was at SoftBank, doing a similar role, supporting our investment company, the companies that we invest in, and was also at Russell Reynolds, the executive search firm, in both their New York and Miami office. And I had an earlier stint in climate, which has been really fun to come back to now several years later, and really happy to be here with this group of people. So nice to meet everyone.
Thanks for joining us, Brett. And Christina from Lower Carbon.
Hey everyone, I am really excited to be here today. It's amazing to see how many folks are here that are interested in working on climate. I am an operating partner focused on talent at Lower Carbon, and I've been working in the talent space for the past 10 years or so. I've always been drawn to pioneering and mission-driven tech companies. I spent almost 4 years at OpenAI before this and time at Cisco Meraki before that. And I joined the team here in order to support the most innovative and impactful companies being built in climate. Lower Carbon, like Jonathan mentioned, is 100% dedicated to climate tech investing. Our portfolio is made up of companies that are working on solutions to decarbonization, carbon removal, and buying more time for the planet and the people that are being affected now and in the near term. For our Lower Carbon team, we have offices in San Francisco and LA, but we invest in companies all over the world. My role at Lower Carbon is kind of three main parts. I work with talent that's excited to work for our portfolio companies, especially those that are on the senior and executive level. I advise our founders on building their systems and processes needed to hire, and then I also hire for our own internal team at Lower Carbon.
Awesome. Thank you for joining us, Christina. And last but definitely not least, Matt from USB.
I'll take the least moniker. Hey everyone, my name is Matt Cinnamon, and I'm here with Union Square Ventures. We're an early stage venture capital firm based in New York City. Unlike both Galvanize and Lower Carbon, and Jonathan mentions this at the top, we are not exclusively climate investors. We like to invest in businesses that operate at the edge of large markets that are being transformed by societal or technological pressures. One of the biggest societal pressures that we see is the climate crisis. And so we like to invest in businesses that are mitigating or responding to the climate crisis. We have a separate fund that we invest out of specifically for climate-related businesses. It's about a $250 million fund. We're on to our second one. So we've been doing pretty dedicated climate investing for about 4.5, maybe 5 years now. There are 130 total companies in our portfolio, 30 of which, or roughly 30 of which, are in the climate space. And my job, among many things, is helping our companies build world-class teams. The primary way that we do that is by meeting wonderful folks who are looking for new opportunities and then making sure that our portfolio companies know who's out there and who's looking for a new opportunity. And I say that we tend to specialize in like really key early stage hires or growth stage executives. But that being said, there's lots of opportunities to fill at startups, and we're always trying to make connections when and where we can.
Awesome. Thank you. That is also a great segue into our first question, which is really, I think in general, not everybody is super familiar with venture capital firms and how they work. But especially, the portfolio talent function is something that's, relatively new. I would say 10 years ago, a lot fewer venture capital firms were investing in this. And I don't think there's a one size fits all. I think each of you three kind of have different approaches to how you think about that function, which you each touched on a little bit in your intro. But I wanted to delve in, especially from the perspective of folks who are looking to transition into climate and are seeking jobs potentially at some of your portfolio firms, your portfolio companies, about how you think about that segmentation and like how your firm helps them, what you do and don't do. Maybe Christina, I'll start with you on that, and kind of we'll go around the room.
Yeah, absolutely. Yeah, I think there are definitely a lot of ways that you can look at getting into these climate companies. And I think even the fact that you're here today shows that you're starting off in the right place. We are at Lower Carbon, we are partnered with Climate Draft. And I think Climate Draft is a great kind of first stop to come to, where there's comprehensive resources to learn about climate, discover jobs, and become part of the talent network here, making you discoverable to companies and founders and VCs. So that is, one thing I would really highlight is that you're all in the right place to start. In terms of kind of like expanding on the talent function here, I definitely love to support talent that's interested in working in our portfolio companies. Always excited to connect with people who are bringing their skills into climate, and we really need more people working in this space. So I am always happy to provide kind of resources and ideas of how you can get started. And then I also spend more time kind of actively meeting folks for key roles at the more senior level and for some of the executive hires, especially at the growth stage.
And Brett, I think you touched on it. Thank you, Christina. Brett, you touched on this a bit as well. It sounds like you have a similar focus in your day-to-day in terms of those more senior executive hires.
Yeah, that's correct. And then we also, on our website, there is a job board that, similar to many of the other resources that that the other firms on here also have, and what Climate Draft Job Board 2 features the open roles across a variety of levels at our portfolio companies. So definitely check that out, and I'm happy to send over the link. We also, throughout the year, will host other opportunities to engage more broader levels of talent, but on a day-to-day basis, and kind of what our offering is to the companies that we invest in, I do focus on that senior level in particular.
And I think both of you kind of also spend time working with companies on thinking about their hiring plans in general, advising them on just kind of basics of, for a lot of early stage companies, just how to set up the hiring process. I think that's something that is challenging for a lot of job seekers when they are looking at early stage roles is that the reality is that many of these companies don't know how to hire, especially at the very earliest stages. And I remember one company that I won't name, when they got their first full-time talent hire on, I spoke to her and she said she had 1,000, applicants in their ATS, their applicant tracking system, that basically nobody had ever looked at, which is, I think, and some of these companies from the start don't even know to set up an applicant tracking system. Before we move on to Matt, I was wondering if either of you might want to expound on kind of some of the things that, and Matt, you could chime in here too, but some of the bootstrapping things that you're helping Climate Tech, your portfolio companies set up on the talent front from the earliest stages.
I guess I'm happy to hop in. I mean, I don't want to repeat everything that you said, Jonathan, but that is right. I mean, I can think of a handful of scenarios, live scenarios now, and it's everything from, to your point, discussing what systems to use, to looking holistically at the org chart and where we believe the growth is going to go and come from the product strategy standpoint, and how do we fill that in from an organization standpoint, and where can those pools of talent come from, and looking at job descriptions and really being a partner and setting them up to succeed on the recruiting and people front. And so oftentimes it is also just getting them to think more broadly, given, especially there are a lot of people who want to come into climate that don't have the domain expertise. So what are the different archetypes of people that possess these skills or have similar experiences that maybe don't have the domain expertise, but could easily within, with some learning, come into a role and be successful, or have seen what a best in class growth of X, Y, and Z type of product, and what companies were those, and can they take that learning or that experience and translate it into, our companies. So it's a lot of educating and also helping execute. I'm not executing the search work. I think that's an important thing, because some of my peers at other VCs do execute searches for their portfolio companies. We do not. I will opportunistically introduce candidates here and there, but it's a lot more of an advisory and consultative approach that we take just in order to scale. But it's a lot of education too. There are a lot of other examples, but hopefully that helps.
That's great. Christina, anything you want to add there?
Yeah, I think Brett covered a lot of the important advisory work to do with founders in those early stages. I think it is a lot of just like helping the founders scale themselves, because they are building such amazing companies and already have amazing teams at this early stage, but figuring out um, how to set up systems and processes that will empower them to recruit as efficiently and effectively as possible to continue to build that world-class team. Yeah, I think definitely covered a lot of it in terms of that kind of like forward-looking planning, anticipating the amount of time to hire, setting up sort of like the mission outcome competencies for roles in the beginning to not only align on the right kind of hire to be looking for, but also on sort of how to onboard them and look at success in the first 90 days and beyond. So a lot of that kind of element of getting that structure in place to just enable them to hire even faster and in a forward-looking way to bring on the world-class talent to build on their world-class teams.
Awesome. Thanks. Matt, we didn't forget about you. I feel like USV has a slightly different approach to how you think about your portfolio platform in general and how talent fits into that. How do you spend, what does that strategy look like for the firm, and how do you spend your day-to-day with regards to talent?
Yeah, so one thing that might be different about me compared to a lot of talent partners that you might meet is that I have no real experience in search or talent or HR. And so I don't spend a lot of time advising our companies. Instead, what we do is try to build products and build networks that can help us do our job a little bit better and a little bit faster, which I'm sure the other panelists do as well. I would say the most common scenario that would pop up if a company was, let's say, doing some organizational planning, or let's say they wanted to bring on a VP of marketing, like what we like to do is say, okay, well, here are 3 CEOs that just hired a VP of marketing. Here are 3 former VPs of marketing. And here's a list of like 5 to 6 questions that we think would be really good questions to ask so that you can help figure out what it is that you need. We're a really small team. We're always going to be a small team. We're never going to raise large funds. And so we have to do things that kind of have the most leverage and don't take the most labor on our end. And then, another part of that is finding really good partners who can do a lot of the heavy lifting as well. The one thing that I will add that I get asked all the time, because I think this is good to know as a job hunter, and I wouldn't be surprised if Christina and Brett get this all the time too, is compensation questions. I feel like the one thing that I spend an inordinate amount of time doing is telling companies how much they should pay for a certain position. So one little piece of advice that I would give is that if you ever do get in front of someone who does talent at a startup, it's a good opportunity to pick their brain about how much you're worth and how much money you can make depending on the roles you're applying for.
That's actually a great point that's top of mind for a lot of folks who are looking to transition into climate. Through Climate Draft, we've had a lot of these discussions over the years, and I think our canonical answer is that it's less about climate versus not climate, and it's more about the stage of the companies. That a Series A climate tech startup should probably be paying, in most geographies, market versus other Series A startups in that same market, that same area. But I think a lot of people, what comes up a lot is for a lot of people who would never consider working at a startup otherwise, that they are interested in expanding their horizons to startups specifically to get into climate tech. And so they have less familiarity with how comp works at startups in general, and kind of cash versus equity and things like that. I know it's not something that we prepped beforehand, but since you brought it up, Matt, I was wondering if maybe as a group, there's you have any insights that you want to share on kind of benchmarking comp expectations for folks as they look at startups in different stages? And also, maybe as a second part of this question, we could talk a little bit about how to think about cash versus equity as a candidate at different stages. I don't want to put anybody on the spot, but would anybody like to lead off?
I think you just got to put people on the spot.
All right. Well, Brett, I'm gonna since you have the most diverse experience, I think, across different stages, it can be anecdotal, it can be high level, but just for somebody who's looking at startups for the first time because they want to get into climate and they've never considered working in a startup before, what would you say to them to think about from a comp perspective?
Yeah, and I try to take like a really and maybe others here will disagree, but I think there are different points and times in our life where you can take more risk or you have to turn down risk in different ways, and comp is definitely a lever for that. And look, and we need to pay rent or a mortgage, or there's also like a real life factor. And I think sometimes I hear, especially if folks earlier in their career, the contemplation of cash and equity, but they don't understand the equity, and then they end up also taking a lower comp on the cash, and then there's strapped, and they might have to get multiple jobs and all of that. So I just always like to take and always recommend taking like a real life second back and like live, go through kind of what your budget is, and so that you at least have a benchmark of like, okay, I need to be making this from a cash perspective that I know I'm going to get to live my life and also not be stressed so that I can perform well in my job. And I think more often than not, people don't think about that, especially again, like earlier in your career. But again, there'll be different points in your life where you can maybe take a hit on cash and up the equity. I mean, from a personal experience, many years ago, I was at a startup, and when I left, the equity was worth 99 cents. And what it was promised to me was exponential more, and I thought I was going to be still there today. And here I am, and I'm not, and it was an amazing experience, and I'm forever thankful for it. But that kind of really hammered home to me that understanding, even if you think you understand the equity, there is a risk there. And so I just like to be more practical. I actually, on the advice piece, a lot of the times I'm spending advice or giving advice from a comp perspective to our portfolio companies because they think because it's a mission or a climate mission that they don't actually have to pay to market. And in fact, we're encouraging them in order to get the top talent to pay to market as they were a B2B software company or hardware company or whatever that is. So, I'm sure Christina and Matt have other examples, but my advice is always just like also be realistic of like your own personal costs and then kind of go from there, especially with gathering market data as well.
Yeah.
The only thing that I would add is there is Brett's story happens all the time, which is you get an equity package, you start doing the math in your head of how much it's going to be worth one day, and then it ends up being worth 99 cents. That being said, there is a real cash value to the equity that you're being given on the day that it's given to you, and you should factor that into the total number that the company is offering you. And so, they might come to you and say, we're going to give you 0.25%, or we're going to give you 10,000 shares. And I think what you really want to get to the bottom of is like, if those shares were sold today, what is it worth? And then you can start doing the risk calculations in your head based on, the decreased real cash comp that you're getting plus the risk on fake cash that you're getting through equity, and then make the decision on whether it's worth it. And I think people often don't think about the cash value of their equity on the day that it's given. And I'm gonna just copy and pasted an article I will admit it was written by one of our CEOs, but I think it's a really great guide to understanding how companies think about and value the equity that they're giving. And it's a good thing to have in your back pocket when you want to think about what you care about.
And I'll just add one more piece of advice, and sorry to interrupt you, Christina, too, from going. Is like, don't be afraid to go back to the recruiter or the hiring manager, or if it is directly with the founder, and question how did they get to that number and what does it value? I think that's probably one of the top things that people don't do, is just say, help me understand this. And frankly, it is the responsibility of the company to be able to describe what they're proposing to their employees. And for you as an employee, understanding it, because what you don't want is all your employees to be disgruntled when they come in the door and they don't understand what's going on, or, you know, bonus time comes around, and there's a lot of confusion. So I think people get scared that when they get an offer, there's no more opportunity to ask a question, or they feel that their question is stupid, or, you know, anything in that bucket. But it's really, you know, in everyone's best interest to ask all the questions, and definitely please don't be afraid to ask.
Yeah, I think all of these points are really, really helpful and insightful on how to think about equity. And I think we've talked a lot kind of about like the risk side of equity. So other things I would highlight is thinking about the reward side. And I think, yes, first and foremost, ensure that you understand the risk that you're walking into and that you are able to pay the bills that you need to pay and are generally just like aligned with the financial needs and expectations that you have when you're accepting an offer. On like thinking about the upside value, if equity is successful in a company, it's often the highest way to maximize your earning potential compared to salary and maybe less significant stock options in a public company. And I think like when you're thinking about what that upside potential could look like, I would also say having those conversations at the offer stage and modeling out for yourself, if the company exits at this valuation, what will my equity be worth? If it exits at this valuation, what will it be worth? And if there are pieces of information you're missing to try to come up with that model, I think those are things that you can talk to the team about. But as you're kind of thinking about like the upside, those are some things that I would be asking to really try to evaluate like what you think the potential could be and what that means for your equity personally.
Yeah, absolutely. And I would also say that you know, the good news is today that most jurisdictions now require a salary range in the job description. So you should know going in what to expect, and you can filter on that. Like if you have a certain baseline number that you need to make to which I think we all agree, nobody should ever be compromising, you know, their financial needs in the now for the risk on the equity upside. But you know, it's once you've met those baseline needs from your cash compensation, then it's a question of how much do you want to index on the equity upside. That's an interesting discussion to have. But don't be afraid to early on in the discussion, if it's not clear what the compensation expectations are for a role. Like, I don't think any hiring manager or recruiter will mind if you have a constructive conversation about like, hey, I'm really interested in this role. I'm really interested in the mission of the company, but I'm aware of like, this is the baseline number that I need in cash comp. I think you can have that in a constructive way. A lot of people think that's something not to talk about or to avoid, but I think it's better to have that discussion early in the process to make sure that you're aligned rather than once you get to the offer stage.
Yes. And actually, sorry, I just want to add one more thing. Just as you think about, you know, the equity valuation, we are all here in this panel today as VCs. We are investing in these climate companies because we think that they are going to have outsized returns. So, you know, I think not all equity is created equal. And as you're looking at equity in these kind of climate tech companies, it's it's something that, we're excited about investing in because we think that these solutions are not only going to be better for the planet and sustainable, but they're going to be better, they're going to be cheaper, and that's going to create outsized returns for the companies.
Great point. And the last thing I'll add there, not to overcomplicate the equity consideration, but increasingly, there is for companies that are, successful, but because, it can take a long time to achieve liquidity for founders, for early employees, early investors, there are what we call secondary markets. And so as an early employee, you might not have to wait until an acquisition or an IPO to sell some of your stock. This is definitely on a case-by-case basis, but if your company is doing really well, even if it doesn't have what we call a liquidity event, there are sometimes opportunities to sell some of your equity and monetize that along the way. All right. Anything else on this topic that anybody would like to add? All right. So do you have advice for folks, on this call who are looking, to best position themselves to get into climate? So a big question that we get, as an example, a question we often get asked is like, do I need to take some kind of course or have a certification to show my interest in climate or to get some climate education? How do you all think about, and how do your companies, think about hiring folks? What are their selection criteria for, I would say, kind of general roles, especially for people who are coming from outside of climate, bringing, I'm a mechanical engineer, or I'm a software engineer, or I'm a marketer, right? I've never worked in climate before, but I think my skills and experience would be applicable to this role. Do you have advice on how those types of folks should think about positioning themselves to be most attractive to, to hiring managers in your portfolio? I'll go, Brett, you're nodding, so you go first.
Yeah, I mean, I have lots of thoughts on this. I mean, I think mission alignment is important, and very, very important. And if it is an area where you don't have that domain expertise, like, are there other areas in the set of experiences that you have that showed you were a quick learner, or you've pivoted industries or products, or, a whole host of variety of different ways to measure that you've successfully jumped into something new? Or if you're earlier in your career, were you studying X at school, but had a personal interest in Y, and so on the side you did this to help learn it? And whatever you can kind of bring front, once you get in the door and have the interview, you do have to, in some cases, connect the dots for the interviewer of how your career path or your experiences can translate to the job that they have. And, as Christina mentioned, and Matt, like, we are also trying to train our companies and give them the tools to interview based on competencies and have more refined scorecards and all of that stuff. But there is always going to be a bias. And sometimes people just look at a resume and, maybe everything that we've taught them, goes out the drain, and which is what we don't want. But, the opportunity in the interview process to sell what you've done and translate it for the interviewer so that they're not the ones doing it, of how this experience at this company or when you were in school is applicable to the type of work that you're going to be doing in this job that you want, helps continue your story. And again, going back to the mission alignment, there are plenty of roles, that we have that are, first time or first industry, they're new and nascent. And so there aren't going to be anybody who have that domain expertise. But what about the mission are you attracted to, or what work have you done, in other areas of your life that kind of support the cause? And It's just finding opportunities to drive that. And then of course, there are other resources now and, Climate Draft, TerraDo, all these other type of platforms that are providing more educational tools to also refine your knowledge and skill set and be able to also talk more eloquently, to have maybe a more detailed conversation or refine your thinking of what within climate's so big. And so when I meet potential candidates, I always am asking, what particularly in climate are you most interested in, or do you not want to do? It's good to know what you don't want to do. And then that also helps tailor your job search. So I'm sure I'm missing things, but I like to look at, variety, flexibility, proving that you've been able to pivot into other areas and drive successful change or growth or, whatever we're trying to solve with the job opening.
I think one thing that you could do to really help yourself is be like deadly specific. I can't tell you how many calls I get on where someone tells me that they just want to work in climate. And my first reaction is like, well, cool. I mean, we have companies that are like carbon accounting software companies, and we have companies that are actually building micronuclear reactors. And like, they're not looking for the same set of skills. And we have real-time flood mapping software, right? So the best thing that you can do, one of the best things that you can do for yourself is become insanely specific about what and where in climate you want to work and why your skills apply. But I think coming to whether it's a job interview or whether it's meeting someone like us and being a little bit general, especially if you're early in your career, I think it really doesn't do you any favors and doesn't help you stand out. And I think also most people are going to want to help you. Like most people you will meet in life are going to want to help you, whether it's find a new job or help you raise money or whatever it might be, because it's fun to do and they get social capital out of that as well. But like, we're all super busy and you need to make it insanely easy for the people that you're talking to be able to help you by telling them exactly what it is that you want to do and what, who are the types of companies that you want to meet with. So yeah, if we ever are lucky enough to get the chance to meet, like, please don't tell me you want to work in climate, because I don't even know if that's a real industry.
These are such great points from both Matt and Brett, and completely agree. So I think, there's nothing that you need to have on your resume, but spending that time really researching the space and understanding the different kind of solutions. There are so many companies being built in software, in hard tech, and everything in between, across, food and agriculture, across energy, across transportation, like the list goes on. And so there's just a lot of different areas that you could plug into. So really taking that time to understand what the landscape is, and also deeply understanding your own value to a company and how you can articulate that and lean into that, as you're both, meeting folks that could connect to you, and then as you're talking to the companies themselves.
Yeah, and I'll just echo Matt's point. I think because I've talked to a lot of people over the years, and I think for a lot of folks, whether you just want to be generally helpful, like you're legitimately prioritizing coming into climate and you're like, that is the number one thing and I'm willing to do anything. Or, like the challenge, it's kind of like a bit counterintuitive, because you think from your perspective, like, oh, I'm showing how mission aligned I am by saying that, like, I'll do whatever, I'll go work wherever as long as it has this climate impact, and whatever work needs to be done, like I'll do it. And that's awesome, and that commitment's awesome, but counterintuitively, it also makes it more challenging for A, people to help you, and B, for hiring managers to conceptualize, as Brett said, like you got to sometimes do that work for the person. At a very early stage company, you might be talking to a founder. In that case, like they might be more creative and expansive in their thinking. But even when you're talking to a hiring manager, or you're talking to, especially if you're talking to a recruiter, right, they're going off the job description. And so you've really got to, even if you are a generalist or you're willing to do a bunch of different things, you've really got to customize your pitch and kind of be focused about, hey, make it easy for them to understand how you're going to be awesome in this role, regardless of whether or not you're, like just willing to do it. Those are all really excellent points. Another question that we had queued up was around trends that you all are seeing across your portfolios. So, just in general, I think one of the topics we've covered earlier, in sessions earlier this week, is that there's kind of, I think we can be frank about it. There's supply and demand imbalances around talent across the very diverse landscape of climate. And certain areas, there's arguably an oversupply of talent relative to the open roles right now. I think an example would be my specialty, software product management. There's, especially as you look at how many of these companies are hard tech companies, or building things in the physical world, there's just not that many needs. There's not that many open roles for people with software product management backgrounds, and there's a fair amount of people with software product management backgrounds who want to get into climate. But there are also other areas. We just had a panel an hour or so ago, with focused on mechanical engineering. That's an area where I think there's a lot of unmet demand from climate tech companies right now. Anything that any of you would like to highlight that you're seeing across your portfolios in terms of trends of oversupply, undersupply, et cetera?
I would say just one thing to be really cognizant of is, as opposed to traditional software investing, there are a lot more early, like pre-market, early stage climate companies than there are traditional tech companies. And so I think this is something that I've noticed over time with our portfolio as well, that I think when we initially started investing in climate, we wanted to take all the lessons that we had learned from being investors for like 15 plus years and just slap it onto climate. And we made a lot of software related investments. Some of them are going to work out, some of them aren't. That's venture anyway. And what I have found as our climate portfolio has matured is that there are a lot more businesses in the portfolio that have real science risk, meaning like it might work or it might not. And as a consequence of that, those companies don't need go-to-market talent per se. They need someone who can help. They need people who are specialists who can help validate whether or not their technology is ever going to work. And then, their needs are really different. Like we have a company that is like shipping basalt all over the world so that it can be used in agriculture. And like people are coming to me oftentimes with experiences as like a head of operations at a software company, thinking that those skills might be transferable where they aren't always. So anyway, one trend is I would try as hard as I can to look away from early stage, like super early stage climate businesses, unless it's a purely software based business or you have real hard sciences experience that can be relevant to them. And so I would look more later stage if you're kind of on the go-to-market side. The other thing that I would say is that the companies that have tended to be quite lean and get to market really quickly with some sort of piece of hard tech have been able to raise money a little bit easier and at higher valuations. And so the only time I think you should really pay attention to a company's valuation in climate is if they actually have something in market. I think if they don't have something in market yet, then that's just one person's perspective on what that company is worth. So I don't know if that actually is a trend or not, but it's kind of something that I've noticed recently.
Helpful. Thanks, Matt. Christina, you want to chime in?
Yeah, I think it is a really interesting point to think about the differing needs of hard tech companies versus pure software plays. Although, I think both there you'll find both of those kinds of companies within the realm of climate tech. One thing that I've seen that is a large need that I didn't see in software as much is project finance roles. because there's just, businesses with that physical element and hard tech element, it's much more capital intensive. So I think anyone with a project finance background, like there are probably many companies that would like to speak with you. But I think outside of that, kind of going back to some of the things that we were mentioning in the last question, you know, there just are so many different angles that climate tech takes, and there need to be solutions in all of these different areas. And so really drilling in on like what the skills you have are, and if it is operations at a software company, what did that specifically mean? Like what projects were you responsible for? What kind of practices did you implement, and matching that to companies? So yeah, I think it's still there are trends, but I'd also say that there's still so many different companies out there and approaches that there are needs for all types of skill sets.
Right.
Yeah, I mean, I echo both exactly the same. Where we've seen, and since I joined, 16 months ago, continues to be a need with every new company we invest in around the go-to-market motion. And in particular, and this is very limited to the subset that I'm focused on, is like enterprise experience. It has been a theme. But I also think, broader, like we've seen finance roles, people leaders. I just not as involved on the tech and eng side, and we're starting to see product, and now more and more even getting into the go-to-market motion, customer success or implementation. I continue to see more of getting implementation managers or leaders in place to help. Now we have the product and or the software, and we need to bridge the connection or make it a smoother implementation on site, or whatever that may be. But those are really trends, focused on the Galvanize portfolio in particular. I just go back to, again, when you have these meetings or interviews, just try to pick out one or two things per your experience that do line up exactly with the role that you're talking about, or show that you've demonstrated and used your interest to learn something else that is related to it. Especially if you're trying to also move from like a consumer focused business to a B2B business, because that's not a logical connection sometimes. But there can be a lot of learnings taken and applied to the other. So how will you think through it and implement that? But yeah.
Awesome. Great. And yeah, I think to just repackage some of this is like climate tech is different in many ways. Yes, there is a segment of pure play climate tech software companies. I can think of Watershed, Regrow, Aurora Solar, and those are more typical software life cycles, both in terms of their capital needs, and as well as their talent needs. But as you look at the companies that are doing more hard tech and physical world, if you are somebody who is familiar with the software startup life cycle, there may be some very stark differences, both in terms of the capital stack. Like you're not going to take VC all the way if you're building something that requires factories, in order to get to scale. You're not going to have VCs funding that all the way to IPO. And similarly, the prioritization of talent by stage is going to be a bit different. All right, we've got just 9 minutes left. Thank you, panelists, so far for a great discussion. We've got a bunch of questions in the Q&A. Please add your questions there and upvote. I'm going to use the upvotes as a way to prioritize these. We're not going to get through all of them today, but we're going to do as much as we can. A couple of the top questions are around fractional talent. I think especially at early stage, We can see more companies working in fractional, leadership and other types of resources. Would any of you like to opine on what you've seen across your portfolios around fractional talent?
I just got asked for a fractional head of HR. I think that's a pretty common one early on.
Yeah,
Um,
sorry,
yeah,
go
go ahead. No, please.
Yeah, I would just generally say that it's definitely something I can see companies lean on, like especially in those early stages, where it may not be clear if there is that long-term need yet, or there may be a specific kind of project that someone could come in for to like set up certain systems or processes. So yeah, I think fractional talent or advisory talent can be really, really helpful, especially at the early stages.
Fractional CFOs are also really common in both our regular portfolio and our climate portfolio, specifically for the reasons that you mentioned earlier, Christina.
Yeah, and even on the, sales side, being able to take advantage of someone's prior experience growing a business from X million to whatever, but I'm often talking to our portfolio companies about thinking through an interim or a fractional leader to solve or get to the next stage, to really define and help them define where the org is going and leverage their expertise. There are a lot more, I think in the last several years, a lot more people who, are wanting to take a full-time kind of career break, but want to give their time and efforts to fractional help, in particular on the climate side. And I think it also helps inform their decision of what they want to come back doing full-time, and being able to see a lot of different companies, but also feeling like they're also able to contribute and help the cause too. So I'm very supportive of it, and have seen it play out. Sorry, not pay out, play out well. And pay out in some cases, but
Awesome, very helpful. And while we are here ostensibly talk about portfolio talent, it wouldn't be something with VCs on stage without a bunch of people wanting to know, how do you get into VC? And there's also a specific question about like the non-investing career path in VC, which obviously all of us here represent. Anybody, Christina, since I know you do a lot of the internal hiring for Lower Carbon as well, any advice you want to give to folks who are looking to break into VC in general?
Yeah, it's a great question. And as we've been talking about this, I was kind of reflecting on how I think some of the advice, at least that I've given, I would give to folks even that are looking for jobs outside of climate tech too. And what I mean by that is, I think the biggest contributing factor in your job search is understanding your own unique value and superpowers, and where you can just generally be as helpful as you can for a company. And so I think that same kind of advice applies here if you are looking at joining a VC in a business development function or in a talent function or in an investment function. Like what are the things that you have done or learned in your education or in your skills or your work experience that you can bring into a VC? More like tactically, Lower Carbon, like plug here for our internal hiring. We do have a job board. If you go to Lower Carbon /gigs, you'll see the roles that we are hiring for currently. And so I think there are posted jobs out there. And then I generally think just trying to, reach out and speak with people who are in the space, and that you can. I think generally, like in job searching, it's great to reach out to, your friends of friends, and try to pick people's brains about the space. And that can facilitate not only more learnings for you, but connections into companies that you're excited about.
Yeah, I think the biggest shortcut, and this isn't really a shortcut into getting a job at a VC firm, is coming with a reference from a CEO. I think in the hierarchy of what venture capitalists care about, whether it's LPs or journalists LPs are investors in the venture capital fund. I think the people whose opinions they respect the most are their CEOs. And I think someone is infinitely more likely to get hired at a venture capital firm if they're coming with a positive reference from a CEO that venture capital firm knows. That's obviously not true in every case. I mean, I don't know, Christina or Brett, if that was true in your case, but I know both of you did come in with a ton of domain expertise in terms of the roles that you were working at. But I don't know, in my experience, that's how I see a lot of people getting their roles, is with really positive referrals from CEOs that they've worked with.
Yeah, I mean, I also would encourage you to understand how each, look at the people at each of these funds and firms that you're and their backgrounds and see where you kind of plug into that. And I can say from years of hiring investment professionals and even here helping the team at Galvanize and across, analysts right out and interns all the way up the stack. Every firm does it differently. Some firms will only hire, folks who went through the investment banking program, and some don't look. And some, some firms require their analysts to do technical modeling, some don't. They require them to do only sourcing. And so I think it's also backing into that and a lot of, leverage your networks. I think it's like the most obvious. All of my jobs have come from my network. And I think it's a very obvious place, but people lose sight. And on the senior side, again, where I spend most of my time, most of our jobs are not, most of the senior level jobs are not posted on a website. But what you can do is you could use your network to see who do you know that works at that company that you might be interested in and learn more about that. The other thing I encourage a lot of people to do is to think about the type of work that you like to do. Do you like long-term projects? Do you like short-term, high, fast pace, changing topics all the time to, do you like being more of a consultant and having maybe multiple clients at the same time? Or do you want one company to focus on? And I've seen operators or people who've worked at companies who think coming into VC is really sexy, and they come and then, they don't like working with 5 companies at the same time. And it's kind of a beautiful failure. Maybe then they go to a portfolio company. So it does work out, but like really having like another moment of yourself to think through, like, where do you show up best and what energizes you to come every day to work? Or what role now will get me to the role that I want to be at, in 2 years and 5 years, and getting that skill set and honing that in. And I think there are lots of even functional areas that the leaders that we look at that, it's great if they have operating experience and really understand how, a company does X, Y, and Z, that they can apply or bring the expertise on our side and can say, I've scaled a business from X, Y, and Z, and these are, my suggestions, or here are resources to do that. So, kind of a long-winded answer, but all of us kind of function a little bit differently and look for different things in the people that we're hiring for. So, it's more work on you to figure that out, but your network will be your best friend in trying to answer some of those questions and finding the right opportunity as well.
That's great. Thank you, Brett. And thank you all 3 of you. We're pretty much at time. The other most upvoted question was around how do you find recruiters outside of job boards. I put Climate Career Week resources page in the chat. We've aggregated a bunch of the top resources for learning, community, jobs, etc. And so please check it out. In addition to Climate Draft, folks like Tara Do, which has learning and community, Work on Climate, has a great community, MCJ, Climate Base. There's a lot of places to find those networks, to find opportunities, and hopefully this is helpful on your way. So thank you again for joining us, to our panelists and to all the attendees, and good luck to everybody.